So it's a pleasure to be here. Keith, thank you very much for the opportunity to present. My name is Jose Peñafiel. I live in Buenos Aires, and I'm going to talk to you about Argentina and Madalena Energy, which I think some of you already know. So our background is, we're oil and gas guys. We've been in the business as a group for over 30 years, and we focused on upstream. We're very commercial and have also carried out projects in infrastructure. We've done physical trading, so we've sort of straddled the spectrum of the energy sector. And we're always looking for the ideal target, which is existing production, cash flow, running room on the conventional side to grow cash flow, and then high impact exploration. And last year we were looking at Argentina again. We actually exited in the first half of 2014. We used to operate 5 fields in the Northwestern Basin, and refocused our attention and have been investing in the Permian Basin since 2013 and have operations there. And there's been a big political change in Argentina, and we wanted to be part of what's happening there. Markets opening up, and it's ripe for new opportunity. So we came about Madalena. We knew Madalena. We were in the space, and Madalena has existing cash flow. It has good conventional production, and it has some really high impact, attractive shale plays in an environment where they're completely deregulating the market. The new president, Mauricio Macri, is probably the most progressive president with the most progressive administration in the Americas. They've lifted capital controls. They settled their issues with the holdout and are back in business regarding capital markets. And we said, look, this is the time to get back into Argentina and to really focus on Madalena Energy with a strategy which is different from what the previous management was doing. So the previous management was basically managing the product of 2 mergers, and so they sort of put assets onto assets, and they did the same with the management and their G&A structure. So no one came in and created a cohesive team with clear direction. And obviously, that meant that they were burning through their money. They actually had money, but they were using it for the wrong things. And my brother and I decided that we wanted to really commit to this, so we injected $23 million into the company. It didn't need the cash. It was already basically cash flow positive. Instead of only focusing on the high impact shale and drilling $10 million exploratory wells, we said, look, we have to have a 2-pronged approach to this. We have to protect our cash flow, grow it by making sure we're managing our conventional assets appropriately and to grow that conventional production. And we will also develop our shale properties. And that's what we've been doing. So, in 4 months, we reduced G&A by half. The company was going through $10 million a year. Now, on an annualized basis, we're under $5 million. The company was cash flow negative. Now we're making $400,000 a month. We drilled a successful well in the Vaca Muerta with our partners, Pan American Energy, which is basically British Petroleum. It was a 1,000-meter lateral that IP'd at 420 barrels, 30-day average. We're drilling another well in October this month. We're spudding another well. And at the same time, we've been cultivating our conventional production by going after the low-hanging fruit. Workovers, pulling jobs, setting additional surface pumps to increase fluid volumes to produce more oil. So what we're trying to do is we're bringing private practices, sort of common sense, with a team which is used to protecting its cash flow and actually living off that cash flow, so cash flow for us is very important, and applying it to a public company that has a great portfolio of assets and in a jurisdiction that has all the winds in its favor. So I think gain efficiencies with our information from our experience in the Permian Basin, in the Wolfcamp play, in the Delaware Basin. We are fully funded, so the company doesn't need any additional financing. We have a great farm out deal with the BP company, Pan American Energy. They are carrying us on 2 wells, one of which we drilled that's been productive. The second one we're spudding this month. And then there's a credit facility from BP which gives us $40 million for development. Next year we'll be starting on a 10-well development plan in the Vaca Muerta shale in Corión Amargo. Our cost base has gone down significantly, and we have about 1 million net acres in Argentina. So I've talked a little bit about the Vaca Muerta play, but we also have really interesting assets in the northwestern basin, in Salta and Formosa provinces. So next year we'll be focusing on additional farm outs. We've already had several expressions of interest from majors that want to come in and do something with us in Curamuele, which is also in the Neuquén Basin that has 3 potential benches that have already been tested vertically. So we know that there's production there. This is a little bit, about what we've been doing in the past 3-4 months, just really focusing on cost reduction. So far, I think we've done a good job. We're making $400,000 a month. Our target is really to get up to $700,000 a month. I think by the end of Q1 we'll probably be there. We're in the sweet spot. I mean, we're the only publicly traded company that is heavy on Vaca Muerta, where you can have direct exposure to that play. YPF obviously is a big player, but they have all sorts of assets, and it's not as focused. We have 2 concessions there, one that we're already developing with Pan American that I've mentioned, and we have a 90% working interest in Curamuele, which is in the wet condensate window, and tested oil already from 3 benches, expressions of interest from majors. We're going to do a farm out deal next year, probably much better than the deal that we got with Pan American in the Corión Amargo Sureste. So very excited about that. And we're in the right zip code. We have production all around us. Shell is very active immediately southwest, adjacent to us. We're relatively close to where Chevron's also drilling their wells in the Vaca Muerta. So just to give you an idea of the magnitude of the prize, net to us, contingent resources-wise, that concession, which is only 23,000 net acres, gives us 70 million net resources. And you already have 2 wells proved up, de-risking that whole play, which NPV of a full development gives you $600 million net to our position just in the Corión Amargo Sureste play. So there's a big prize. Obviously, to get there in a jurisdiction like Argentina, you can't go and put all your money into one exploratory well. I mean, that's how you go bust, because there's risk associated, mechanical, geological. You have to make sure that you have the cash flow, to have the staying power, and that's why we have the 2-pronged approach. Vaca Muerta's taking off. It's taken a long time. There's been a lot of politics in Argentina, but finally now we have the right government with the right policies. They're deregulating. They lifted capital controls. And you can see that in the rise of production from the Vaca Muerta shale formation. And I think I'm out of time, but thank you very much. Again, very excited to be here. Come ask me questions. Our major shareholder, Magdalene Capital, is here. They own 20% of our stock. We also have a couple of other members from Madalena. Again, very pleased and thankful to be here. Thank you.